Welcome to MacroHive Conversations with Bilal Hafiz. MacroHive helps educate investors and provide investment insights for all markets, from crypto to equities to bonds. For our latest views, visit macrohive.com. So greetings, Matsuoka-San. It's always good to speak to you. I had you on last year as a guest, and it was really very well received. And today, Japan has been a huge focus for investors. It seems to happen every 4 or 5 years. Japan comes into the spotlight. So I really did want to bring you back on and discuss this further. So welcome, Matsuoka-san.
Hi, Bilal. Thank you very much for inviting me again.
Now, I did want to talk about the Bank of Japan, but before we do that, I just wanted to get some context of Japan. So when you look at the Japanese economy, how does it look to you, on the growth side, labor market, and so on?
We think that Japan is still in recovery mode, but this is getting weaker because on one hand, we have delayed start of the reopening since last year. However, the ongoing global recession, or how you call it, slowdown, starts to weigh on the manufacturing sector, so that they are now competing with each other, so that the underlying strength of the Japanese economy is somewhat weakening. For example, in the fourth quarter last year, Japan's growth was only at 0.6% annualized. Despite that period, the start of the more full-scale reopening of the economy. So I think already we are facing stronger headwinds from the global economy, despite our own tailwind from the reopening of the economy.
And on the global side, now we are seeing China reopening. We saw quite a dramatic end of zero COVID in December last year. So now China's reopening now. Will that have much of an impact on Japan? So for example, if Chinese growth ends up going up to 5-6% this year, last year, say China was around 2% or so, will that, help Japan?
To an extent, yes, but this time we have to be very careful in the sense that the reopening of the China economy mainly benefits their domestic service activity, in which case some businesses operating in China will perhaps benefit. But in terms of Japanese manufacturing activity, in terms of the exports, the benefit will be probably much more muted. And the second round effect from the reopening in China would be decline, or quite substantial decline, of the likelihood of another round of the supply chain disruptions. That's quite positive, but in itself, it doesn't support any additional economic activity. It is this decline in the risk, not the outright positive impact. So in that sense, it has some net positive impact on Japan, but mainly for those operating in China.
Okay. And, you mentioned Q4 GDP in Japan was relatively weak, even though Japan was reopening. Why hasn't the Japanese recovery been stronger?
I think during that Q4 period, we had another round of COVID wave that may have dented some of the spark of domestic activity, like tourism and so on. In addition, we think that private consumption, when we look at monthly data, it looks still very moderate. It's growing, but only at a very faint pace. I think that suggests that reopening itself affects positively in some industries, but on net, there is some intertemporal reallocation of consumption between period or between goods and services, so that net, you may have increased some spending on tourism, but to do that, you have to withdraw some other spending. As a result, on the macro basis, I think the contribution from the reopening on the entire consumption seems to be very moderate.
Yeah. And if we move over to the inflation side, what we see is headline inflation seems to have picked up in Japan quite sharply. It's notably above 2%. But then looking at different core measures, it's not as strong. I mean, how do you see how would you characterize the Japan inflation picture?
The total inflation in CPI is rising at about 4% year on year, but the large part of that has come from three sources, most of which are considered transitory or exogenous in Japan. One is energy, second, food, and third, yen depreciation. And all of them have been reversing its direction, so that the total CPI inflation is likely to be peaking sometime in early part of this year, perhaps first quarter this year. And as such, we do not anticipate 2% inflation to be sustained towards the end of this year or into the next year.
I was going to just ask on the inflation side, just before you go into more of the details. 4% headline inflation is obviously high, but in the US, in Europe, in the UK, we saw inflation closer to 10%, 8 to 10%. Even Korea, you saw higher inflation, and places like that. I mean, why didn't Japanese inflation go up towards 6, 7, 8%? I mean, Japan's a massive oil importer as well.
There are several types of government intervention in terms of the price setting. One is that governments have decided to give some subsidies to the intermediaries in the processing of the fuel into retail gas stations. And that is considered to be a decline in CPI-based fuel pricing because we pay less than otherwise. That is considered a decline in CPI. It's a kind of a government intervention. Similar applies to travel spending. They also paid some subsidies to the industries, and they lower the prices we pay from the consumers. That is also considered a decline in CPI. But that kind of intervention tends to depress CPI to some extent. And I think this is also, and the similar is happening in France, where your CPI inflation is slightly moderate than some other European countries.
Okay, yeah. And then you were going to talk about the outlook for inflation.
If I may. Okay. We think that overall inflation is likely to come down to the tune of about 1% or around 1.5% towards the end of this year and stay there, depending on how you assume the global oil prices and food prices. We simply assume that the oil price is at around $70 to $80 a barrel to continue, and stabilization in food prices. That's the assumption. Regarding the core, food and energy, it's running at about 1.5% at the moment. And this may sustain at the current rate, but some of the effects of the initial round of the price hikes will begin to fade. So that, again, in core CPI inflation, we anticipate around 1%, maybe up to 1.5% at the end of this year. So in either metric, 2% seems to be either remote or one-off.
Yeah, and on the core inflation side, the reported core inflation numbers, it's often ex fresh food and energy rather than ex food and energy, unlike the Western economies. Why does Japan look at ex fresh foods rather than ex food?
That was based on the decision of BoJ, maybe 10 years ago, that we spend a relatively large proportion on food spending out of the total consumption. So that if you cut back all the food spending, that the core definition has a very small share, like 55 or 60%, like around 70 for many other developed countries. That's one reason why they decided to remove just fresh food. But in these days, the distinction between various types of the core inflation has become a bit vague. So I would imagine, given the current situation, unique situation that the contribution mainly coming from food and energy, it's probably safer to look at the Western definition of core instead of Japanese definition.
And that's where the core that you mentioned earlier is the Western definition, X overall food and energy. Because if you look at core X fresh food and energy, that's running at a higher level than the Western definition, so to speak.
Right.
Yeah. And what about wages? The Bank of Japan often talks about, they want higher wages and people talk about wage price inflation spirals. So where are we on wages in Japan?
Okay. If you can show several charts out of the presentation, later on you can put that. That's
yeah. I'm just going to share the screen. So, is there a particular slide I should go to?
This is what I'd said, about 70% of page 5, and this is to show that large part of the rising inflation either measured by month-on-month change in the top chart or in year-on-year change in the bottom chart shows large part has come from food and energy.
Yeah, so for the benefit of people who are just listening and not seeing the video, we have some charts looking at the breakdown of Japanese inflation. And as Matsuoka-san said, it seems like the bulk of it has been driven by food and energy. And the slides will be available on the show notes as well, I should add.
Okay, so could you move on to page 10?
Yeah, so we're looking at a slide now, different measures of the labor market. So Matsuoka-san, if you could just talk us through as descriptively as possible so that if people don't have the slides, they'll also understand as well.
Okay. Basically, wages have several definitions as well, like aggregate nominal wages or per capita monthly wages or hourly wages. And those three behave somewhat differently in Japan. Because of that, there is some confusion, but let me say that currently, nominal aggregate wages, that's on the top right chart of orange line, has been running at about 2.5% to 3% a year. That's growing for the most part of the last 7 years or so on a steady basis.
So when you say nominal aggregate wages, that's the total wages paid to everybody collectively in Japan.
Yes.
Yeah.
But a large part of this has come from a rising employment, which is a green line here.
Okay, so more people have entered the labor force, so there's more workers now.
Yeah. And the other components consisting of this nominal aggregate wages is the per capita wages. That's the blue line here. And that's rising only 0.5% a year, maybe 0.7 or 0.8% a year. This is the per capita wage growth. And that's very, very moderate. And usually people are talking about this blue line movement, especially in spring wage negotiation session. And people want this blue line growth rate to jump as much as possible, like 2%, 3%, 4%. I wonder this is a bit difficult to achieve because we are already facing a rising labor share. Employees have already gotten expanding share out of the economic output. As a result, labor share is rising. And if you want more wages, then the labor share will have to rise further, and probably at the expense of the profit margin of the companies. We can see that chart in the next page, page 11, on the top right. This thick orange line is the labor share. That's on the line already.
Yeah, so what we're looking at is the labor share, which is how much labor takes out of GDP, and that's been rising since 2015 pretty much from the chart. So from 2015, it was around 48% or so. Now it's gone up to around 52, 53%, up to around 53%. So it's been quite a noticeable increase in the labor share of GDP, more than 50%, which is interesting. It's much higher than what you see in, say, the United States.
Okay, so in that sense, or at least I think that the strong demand for higher wages or higher wage growth, which may be justifiable from the humanitarian perspective, in terms of the reality, it's rather difficult, except some very large companies which can afford to do so because of their large exposure to the overseas economies, from which they earn a much larger proportion of income. But for small and very small companies, where they don't have, in which they don't have any overseas exposure, they can't afford to make higher wages to employees.
And just from a philosophical perspective or an economic perspective, do you think the central bank can influence wages or not? Because the BoJ, when I look at speeches of Kuroda and other Bank of Japan members, they often talk about how they want wages to go up and they want policy to support that. But in your view, is that the right way of thinking about it, that the central bank can influence wages or not?
Indirectly, they can if they propose such practice to the businesses. But this is mostly government responsibility, or to say the least, the company's responsibility, depending on how they can afford too much, to what extent they can afford. So in a moral sense, it may be possible, but not necessarily the right way of interacting with the businesses. And I think that Mr. Kuroda and some other people, BoJ, mentioned wages because they think that the virtuous cycle in the labor market is necessary for inflation to be sustained at a higher level, like 2% or higher. And they also understand large part of the inflation acceleration so far doesn't reflect improving labor market. So in that sense, they wanted to see a better labor market to generally raise the temperature of the economic activity.
Okay, and then we'll come on to talk about Kuroda and his legacy later on in the podcast. But obviously, there's been a lot of focus on the Bank of Japan recently. We had the action by the Bank of Japan in December to change their yield curve control, or YCC measure. So that was the policy where they targeted 10-year interest rates in Japan to be within a band. it's changed over time to, plus or minus 0.25% around zero. And then in December, they moved it to plus or minus 0.5%. It came as a surprise. Why do you think they made that action in December?
And I found it a bit bizarre in such announcement, frankly speaking. And it is, based on their announcement, it seems to have come from the dysfunctioning of the JGB market, where the transactions evaporated and market mechanism doesn't find an appropriate prices. And as such, they decided to widen the band of the YCC at 10 years. However, this looks a bit odd because permitting higher band suggests naturally tightening of the monetary policy, no matter how you make some kind of explanation later on. So whether Japan is in a good situation or good enough situation to accept some kind of monetary tightening is still debatable in my view. So I find it a bit odd, and why they come at that particular moment, I have no explanation that satisfies myself.
I mean, there was some speculation that there was government pressure for them to change YCC. One question, I guess, is in that context is, does the government have a view on YCC or not? I mean, do they want tighter policy, or do they want the 10-year yield to not be constrained? Is there a government position on this?
The government position on the YCC, in my view, is a bit ambiguous. On the one hand, they want accommodating monetary policy, but on the other hand, they want to avoid excessive yen depreciation. So their worry is probably coming from weaker yen, which will stymie the stifle the household sectors or businesses in general, in their view, so that they try to make some pressure on the BoJ in that sense that higher yield in B would remove some of the weaker yen pressure.
And since then we've had the announcement of the next Bank of Japan governor. Can you talk to that, of what your view is on the new prospective governor?
The government has proposed Professor Kazuo Ueda as next governor, and two other candidates for deputy governors. Mr. Ueda had been possible members in the past, at which he actually voted against the proposal to remove the zero interest rate policy in 2000 on the back of the possibility that would weaken the economy and made the BoJ return to zero interest rate policy. And in that sense, we think, at least humbly speaking, that he has the kind of sense of logical sense that the dynamic and consistency of the monetary policy fit into its action. In other words, if you prioritize monetary policy normalization or tightening, and there is a boomerang back to you if it's premature. So he decided it's probably premature at that point.
So this was back in 2000. So when Ueda was part of the Bank of Japan committee, he was against ending low rates early because he was worried that that could lead to economic weakness, which would come back to hurt the reputation of the Bank of Japan. So he sounds like he's cautious or, dovish, I suppose.
I would say so. He's probably reasonable and probably dovish as well. But one other concern is that he was also worried about expanding the quantitative easing in 2002 onward, because once we're in, there is not possible rational way to resolve it. And as a result, we are now having more than 500 trillion yen JGBs at BoJ's balance sheet. In that sense, he is also cautious about too much aggressive monetary easing at that point.
Okay, so both sides you can argue it. So he's against too much monetary easing as well and balance sheet expansion because he thought that would be hard to unwind and be problematic. So from what you say, it sounds like you could argue both sides, that he's somewhere in the middle almost.
Right. So at the time of 2000, no one anticipated the BoJ to have 500 trillion yen JGBs. In that sense, the first comment would be very reasonable, and given that his second comment on the risk of too much expansion of the balance sheet can be also justifiable 20 years ago. But given that Japan's economic weakness continues for the most past 7 years, the balance sheet ended up with such a scale, and it is also unavoidable to a degree, no matter whether Mr. Kroder adopted such an aggressive policy or not. Japan's potential growth rate is very low, and as such, the period of being in a zero interest rate policy can be much longer than any other developed countries.
And, with the change in the composition of the Bank of Japan now, I mean, what's your expectation on what their policy changes will be in the next 3 to 6 months? Will they abandon YCC? Will they exit zero rate or negative rates? What do you think in terms of policy actions that they're likely to do?
My view is that no additional action towards monetary policy normalization for the rest of this year. That may sound a bit odd, but given that, based on the most recent brief interview with media with Mr. Ueda he mentioned that the current monetary policy seems appropriate and justified, which suggests whether he is really willing to continue that course. That's a different question, but given the Japanese economy's condition and inflation over economy, he thinks that there's no room to make any change. And I also think, given that the transitory nature of the inflation exceeding currently 2%, and the possible hurdles in the labor market against the virtuous cycle, it's no matter who is appointed, I think that the reasonable conclusion is to maintain the current stance until something very good eventually comes.
And so when you say no action, that includes no adjustments to YCC as well?
No action.
Yeah. I mean, what circumstances could you see where he does, where the Bank of Japan does do something, say for YCC? What would need to happen for you to think that actually they will abandon YCC?
That's quite high hurdles they have to overcome. I just mentioned a bit earlier that we have transitory nature of inflation. Number two, labor market has some self-defeating nature, not to grow in a virtuous cycle. In Japan, it has a very low potential growth rate. So all of these will be hurdles for any possible change in monetary policy, including the YCC modification, in my personal opinion. As such, only if we see more prolonged economic expansion along with slow but steady increase in inflation up to 2%, then I think that the modification to the YCC can be adapted. The reason why I am personally very cautious about premature adjustment is based on the dynamic consistency. Once you introduce such change ahead of normalization of the real economy, it can't continue. This happened in Japan several times, like 1997, 2000, 2006. All they adopted premature monetary normalization. And this is not Japan only problem, but also in ECB in 2000 or 2011, just before the onset of the euro crisis, and taper tantrum in the US in 2013, all suggest which to choose normalization of monetary policy or the real economy. We should choose real economy, not monetary policy normalization. And that will be a very important lesson we learned in the past 20 years. And based on that, I tend to be very cautious in the next step.
And you don't seem to put much weight on the argument around the dysfunction in the JGB markets. You don't seem to think that's a big issue.
There are many issues, I think, and dysfunction in the JGB market is also one important issue. But humbly speaking, I would say, again, we have to choose either real economy or dysfunction, or addressing the dysfunction of the JGB market. In that sense, I would imagine it's probably better to focus on the real economy and maintaining the current accommodation for some time to come.
And now that we're likely, we will get Ueda as the new governor going forward. We've had Kuroda, will step down. What do you think Kuroda's main legacy will be? I mean, did he achieve success in your view? Did he fail in his objectives? I mean, how do you view the Kuroda era for the Bank of Japan?
Okay. I understand there are many different things, but in my view, what he has succeeded is that he didn't make mistakes, except the December YCC adoption. And that's probably the very important contribution of not putting the economy back in stagnation. For example, in terms of nominal GDP, to which I think monetary policy can influence, since the introduction of QE in 2013 when he was appointed, Japan's nominal GDP growth has been growing up until the onset of the pandemic at about 1.7% a year. That's a meager growth, but from your perspective, but from the Japanese perspective, in a generation of lost generation, that's quite substantial achievement on the back of continuing this quantitative easing. So in that sense, even if he didn't make 2% inflation achievable, the recovery of nominal GDP is much more important in my view. If that continues at 2%, some, even if not all the problems Japan face, like fiscal deficit, aging, can be alleviated.
Yeah, and on another side, on the government side, we obviously had Abe, Prime Minister Abe, and we had Abenomics. We now have Kishida, the new, the Prime Minister, in over the past year or so. Is there a difference? Would you say, is there Kishida economics, or like how do you make a contrast between Abe and Kishida in terms of economic policy, or how they'll be known?
I see. I would say that there are some differences, mainly in the emphasis point. Abe put more emphasis on growth, Kishida on redistribution of income. So it's a very, I would say it's too simple distinction, but in that sense, Kishida still tried to stick to what Abe did, at least part of it. So it's not so dichotomic distinction, but to a degree, Kishida focuses more on a distribution side. For example, he's trying to, with some additional support for childcare, in which case Japan's GDP share by the government help on child rearing, schooling are much lower than other developed countries, and he tries to address that.
Okay, yeah, understood. And in terms of the fiscal side, you mentioned fiscal earlier. Some people now are starting to talk about, is this the moment where Japan's debt dynamics will finally come to bite Japan, and JGB markets will blow up and Japan will implode because the debt levels are so high? What's your view on that?
Okay. On the fiscal policy per se, I have a chart on page 31, just in case you can later put it.
Yeah, let me just show that chart. And so this is some charts of different fiscal measures, government spending as a share of GDP compared to other countries. So yeah, Matsuoka-San, if you could just talk us through this.
Okay. So after the onset of the pandemic, all the governments in the developed countries tried to support the economy by expanding their total government expenditures by about 3 to 5% of GDP per year. And that's the jump on the top left chart. And however, many countries started to withdrawing it on the right side chart. The share of GDP in government spending since 2020 has been declining, except some countries, including Japan, where they try to maintain such stimulus ongoing on scale of about 5% of GDP or so, even in 2022. So in that sense, Japan tries to keep that when other countries are withdrawing. This is probably the first time we saw Japan and the rest of the developed countries are moving in the opposite direction in fiscal policy. Previously, in the past 30 years, they moved in tandem with each other, so that Japan wasn't so conspicuously, not so conspicuous. But this time it's different. Japan tries to support the economy by fiscal spending, but others are withdrawing. This may put financial market attention to Japan's, say, fiscal deficit or government debt. Even though I still think that Japan has substantial buffer against such pressures. For example, I tried to measure how vulnerable each country's finances of the government by constructing so-called fiscal vulnerability index. That's in page 32. And this consists of 7 various indicators, like private sector financial assets minus government debt, current account balance of the balance of payments, net external asset, government fiscal balance, and so on, all measured in standard deviation and take the simple average. In the third quarter last year, Japan stood in the middle of the pack, the 10th highest out of 24 countries. So
yeah, according to this metric, so you looked at different measures that affect how vulnerable a country is to a fiscal crisis. And Japan is, middle of the pack. The countries that are in a worse situation are countries like Greece, which, would probably not surprise, but United States, Italy, UK, Spain are more vulnerable than Japan. Presumably part of that is because their current account dynamics are worse, I'm guessing, and then also their net external assets are presumably lower or worse than say, Japan's.
Yeah, that's correct. Japan has some vulnerability in terms of the net government debt, which is second or third highest, and in terms of fiscal balance as well. It's still running a 6% of fiscal deficit to GDP. However, Japan has substantial financial assets in the private sector that can offset in the unlikely event that the government made default and the government debt become worthless. They still have quite substantial financial buffers, along with other high-income countries. In that sense, I think Japan is still average country among developed countries, not the extremely vulnerable or dangerous country.
Okay, yeah. And so, overall on the economy, your sense is that Japan's in recovery mode, but that recovery is weakening, and the economy is likely to slow down as the year goes on. Inflation is transitory in Japan, mainly driven by food, energy, and a weak yen, and so the inflation picture will start to sort of turn lower. So probably head down towards 1%. You think the Bank of Japan's unlikely to do anything? After the surprise YCC in December, that's enough for them. Do you have a view on Japanese market? So Japanese equities, the Japanese yen, JGBs, any kind of outlooks on Japanese markets?
On the yen, it depends on both U.S. factors and Japanese factors. Usually, U.S. factors dominate, as you know. So it depends when stop raising rates more than on when BoJ does something. So in a sense, I think yen dollar may continue to remain where it is, with one exception, in the sense current level of the dollar yen level at 130 is possibly 60-70% away from the purchasing power parity trend. Although you can draw so many different lines and different slopes regarding the purchasing power parity, so you can easily refute my message. But no matter which line you choose, it's probably 40% away from PPP. That's quite substantial deviation relative to the past 14 years. I don't know if I put that chart here. What are in what? Hold on, please. Probably not. I'm afraid.
And that's okay. Yeah.
One possible, Japan-specific factor to strengthen yen. It's too weak relative to the purchasing power parity. On fixed income, I would imagine very simply there are 3 or 4 factors driving the 10 yen. Basically, the balance sheet of the BoJ, US 10-year yield, Japan's short-term interest rates, and inflation. And you can assume different types of combination of the changes in those X pricing variables. But no matter how you put them in one assumption, I think the maximum increase in the yield would be up to 80 or 100 basis points, not on the order of 2% or 3%, unless you assume a complete removal of the balance sheet of the 500 trillion JGB out of BoJ balance sheet, which is very unlikely to materialize anytime soon. On that assumption, the upper bound on the JGB may be not necessarily 50 basis points, but somewhere up to 1 percentage point.
Okay. And then Japanese equities, any view on Japanese equities?
It's closely linked with the US market. So it also, in that sense, whether US recovery, US doesn't fall into recession and grow somehow, would actually support the Japanese equity as well. But beyond that, I have very little to add. Sorry for that.
And I know you also follow international economies as well. It's interesting to hear your view sitting in Tokyo. What's your take on the US economy and the Fed?
I think US economy is slowly, and it is probably falling into a recession, despite the financial market expectation it will avoid it. Because at this scale of the monetary tightening, on the scale of 500 basis points, is quite substantial, and they look at the inflation and tighten further. The inflation is a lagging indicator, and that will inevitably delay the timing of the end of the rate hikes, and also delay the timing of the start of the rate cut. That will be quite detrimental to economic activity. So that's my view. Even though that the current unemployment rate is still 3.5%, and that sound resilient, but already housing market has been weakening, and labor market, other than the employment numbers, appears to be easing little by little. So all in all, I think that US is still heading towards weakening part into the rest of this year, possibly into the first half of next year as well.
Yep. Okay, great. Okay, that was a great run through of all the the Japan macro and international as well. I did want to round off with just one question on books. Last time we spoke, I asked for some book recommendations. Have you read anything good recently on the book side?
This is totally different from the economics, and I don't have the exact name of that book at the moment. Hold on, please. And it's about Shakespeare.
Oh, okay.
And some people wonder who wrote Shakespeare plays and sonnets. And in that sense, there is the book called The Reading Record, Shakespeare, Succession, and Sonnets.
Okay, Succession and Sonnets. So it's about what inspired Shakespeare to write the sonnets, or who actually wrote it? It wasn't Shakespeare. Are they questioning the authorship, or? Yes,
many people, presumably Shakespeare from the start for the Poneglyph wrote those books, plays and sonnets, and his camp believes it's written by Edward de Vere, the 17th Earl of Oxford, and he thinks that sonnet is record of keeping that to the future generations.
Okay, that's interesting.
Provocative. However, this is quite sensible to me.
Yeah, no, absolutely. Yeah. So it sounds like you have an interest in Shakespeare. Are you a big fan of Shakespeare's works or something? Or
it doesn't mean I am a big fan of Shakespeare, but I am very curious about who wrote those sonnets and plays, and why this Edward Lear wasn't shown until about 100 years ago as a possible candidate. So it's a kind of Thomas Kuhn's revolution in scientific discovery. Or up until now, up until some point, people in that small community continues to believe saying A, and that must be a truth. But at some point, things will change. Previously, Ptolemy's astronomy was considered right, but eventually it was thrown out by the Copernican universe.
Yeah.
Often here, not in science, but in literature.
Okay, no, that's great. No, I'm a big fan of Shakespeare, so I'll make sure I read that book. So, and so finally, how can people follow you? Is there any easy way for people to follow your work? Because I know, you produce stuff for the institution you work for, so I'm not sure how accessible it is. But is there a way for people to somehow follow you?
There's one possible way. My employer, SBI Securities, has opened up an office in London where they have some broker-related businesses. And if you can reach them, they may be able to do some processing. And otherwise, we are still in an early stage of the business, so we have very limited resources in terms of the distributions. So unfortunately, that's one way you can reach us. But if you have, you see some interest, please reach my company email address. That's somewhere on the presentation.
Yeah. I'll make sure to include it in the show notes as well, so it's more accessible to everybody. Okay, great. So with that, thanks a lot. As usual, it's great to speak to somebody who knows Japan so well. A lot of people outside of Japan have lots of misconceptions about Japan. So it's good to hear a real expert. And we'll see what happens with the new BoJ leadership, and we'll see how the economy does going forward. So once again, thanks a lot, Matsuoka-san.
Thank you very much for your time.
Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.